Hello, everyone. Thanks for joining us on this Saturday morning, and welcome to this specialist trading educational presentation. Now, today, I'd like to talk to you about how to catch a volatile market. We've all been experiencing these markets as of late. Last month, it went straight down. From the beginning of this month, we've been going straight up, so it's very volatile. Just when you think you have it figured out, it changes direction, and who knows if it's not going to change direction in the next month, maybe even in the next week. Well, I have a great way to teach you. In fact, I'm going to teach you the entry rules to one of our best strategies that's actually designed to catch volatile markets. For example, let's look at this chart here. This is an Roku, R-O-K-U. Now, in February, it was obvious that it was going down. In fact, it was going down fairly strongly, but then we noticed that we have a reversal. All right, this is a very prominent pattern that a lot of pattern traders like to check out, that a lot of traders often look at, and candlesticks, and just a reversal, meaning that you open lower, usually on a gap opening, and then close much higher in the top portion of its range. So most traders would look at this and say, well, that's a reversal. Maybe if you view some other indicators such as overbought, oversold oscillators, you say, wow, we have a reversal when we're oversold. So this is a really telling type of formation. I think I'm going to jump in here and buy. Maybe even go to that chat room where the guy who's in charge of the trading room is telling you that this is a buying opportunity. So let's say you jump in and you decide to buy because you're excited about this, and then look what happens, right? The volatility just increased tremendously to the downside. So at this point, you're saying, wow, I took a big loss there. Maybe you're still even holding the position. Maybe you have some options and you're really getting really hammered on this position. So you say, well, okay, I'm going to get out. And then this happens. What happened? How can anyone trade markets like this where the volatility is swinging back and forth? Just when you think things are going straight down, all of a sudden they reverse and go right back straight up. Well, I'm going to teach you a method today, the entry rules to a method that's actually designed to trade markets like this. In fact, where you wanted to originally be buying, it would have said, no, that's not a buy signal. It actually on that very same day would have generated a sell signal. So you could have potentially captured all of this volatility to the downside. And then when it shifted, and then when the volatility changed to the upside, this strategy would have shifted as well. And as you can see in the last week, would have generated a buy signal right here. So you could have captured potentially the last 3 days of that upward move. And if you're saying to yourself, well, gosh, Steve, I haven't been trading that long, or I really don't know, I need someone to kind of teach me this and sit next to me and advise me because I'm not that kind of a trader. I've never traded this way before, and I'd like to have a mentor, an educator. Well, I personally designed a platform with Pro Trader strategies that would enable you to do that. This is a platform that actually teaches you how to trade. And all the examples and everything going to be seen today was actually generated using our platform, the PTS Primo charting platform. So this makes it really simple for you to learn how to apply this particular method. So welcome once again, and as always, thanks for joining us on this Saturday. My name is Steven Primo. I'm the president and founder of Specialist Trading. I've been trading for a total of 43 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. I traded on the floor. 9 of those years I was a specialist. Now I know a lot of you don't know what a specialist is. That's where we got the name Specialist Trading. If you ever look at those, you can Google them all the time. They're on Google and a lot of different sites. But if you ever Google what a specialist or the trading floor was, if you see those guys yelling and screaming and all these weird hand signals with paper all over the floor, those are specialists. Those are traders on the floor. So if you wanted to buy or sell a particular equity or an issue, your floor broker had to go up to the trader who specialized in making a market. That's what I did. I was a specialist for 9 years. I specialized in markets and waste management, US Air, IBM, Reynolds Metals, a lot of different stocks. And so if you wanted to purchase or sell any of those, if you did that roughly about 30 or 40 years ago, I was the one making a market in those as well. Now, I traded through the crash in 1987 and the bull market that followed. I've traded straight up markets. I've traded straight down markets. This is my 4th crash I've experienced. This last market crash we experienced just last month, where we really, made some major volatile moves to the downside. That's actually the 4th one I've experienced. I traded through the crash of '87. I was trading and teaching in the one in 2000, and then again in 2008, and now once again here we are, 2020, another crash. I've also traded straight up markets, sideways markets, Any strategy, any system, any method that you're currently trading, maybe you think it's brand new or boy, this is something I've never heard of before. It's most likely been around before. It's just been renamed, rebranded. I've traded those as well. So in my over 4 decades of experience on the floor and off the floor in teaching and in my own personal account, I know what works in terms of consistency, and I know what doesn't work, more importantly. So why spend your hard-earned money and your time searching for that holy grail, searching for that perfect system, that perfect market to trade, that perfect time frame, when I've done the hard work already for you? You can just come here, Specialist Trading and Pro Trader Strategies, my sister site, and learn the techniques and methods and strategies that actually do have levels of consistency. All right, I know a lot of you have, most likely because I get these testimonials and emails all the time from students saying, boy, Steve, I wish I had found yours and Pro Trader Strategy site ages ago, because it would have saved me tens of thousands of dollars where I was searching for that perfect strategy or that system or that class that's supposed to have all the answers, and none of that stuff worked. Well, that's why we're here to help you. That's the service we provide. We're not a company. If you come here today thinking I'm going to tell you what to buy on Monday, or tell you this is the new hot market, you have to invest in this, or you have to short this, or you have to buy the options in this, you've come to the wrong place, because that's not what we do. We are first and foremost an educator. I'm constantly asked by people, well, Steve, what should I buy tomorrow? What should I sell? And that, in my opinion, is why most traders fail. You're taking yourself out of the game when you're asking someone or something else what you think the market's going to do, or where should I sell, where should I buy? Because you're telling the markets, I don't have any idea what to do. I don't have any idea or kind of thought on what the market may be doing. So why don't you tell me what it is? Why don't you tell me what to do? And that would be similar to flying in a plane and having the pilot come over the loudspeaker and say, hey, why don't you tell me how I should land this? Oh, does anyone have a good idea? Or a brain surgeon saying, hey, why don't you tell me how to operate here? Do you see the message you're sending? These are professionals who would never do that. Why? Because they've been trained, they studied, they've researched for years so that they know what to do and how to react in every situation. Well, guess what? It's no different in trading. You should be doing the same thing. You should be training and educating yourself and studying with someone who's been trading for not just a couple of years, but for decades, who can train you so that ultimately you will never, ever have to rely on someone or anyone else to tell you what to do or how to trade. You'll be able to do it yourself. Once you get to that point, you're really free. You are now in charge of your own trading destiny, and that, as a mentor, is my goal. Not to have you rely on me so that you have to come here every day and find out what to do, but to take the education so that you can make your own trading decisions. In my 40 plus years of trading, this is the only, and I stress, the only way one becomes consistent. Not by going to a chat room, not by waiting to see what the earnings are, not by waiting to see what the institutions are doing, and not by listening to the guys on TV, not by waiting for the jobless claims or the earnings reports. None of those things have levels of consistency. The only way you become a consistent trader is through sound fundamental education and then making your own trading decisions, okay? So that's our philosophy. That's the concept behind Specialist Trading and Pro Trader Strategies. Now, before we begin today's class, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results today using this particular method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Now, another way to educate you, free and easy every day, is to simply go to our Twitter page. So if you haven't done so already, please follow us on Twitter. A lot of great information I post on a daily basis, education, anywhere from signals our strategies have generated to little bits of financial wisdom. So once again, if you haven't done so, please feel free to follow us on Twitter. There's our handle right there. You may want to copy that down. Now, once again, I can't stress this enough, because even though I stress this in my courses to all my students, we have students around the world in over 115 countries and in virtually every state in the United States. But I get this question even in my live teaching classes to these students where they want me to tell them what to do. I'm constantly being asked, Steve, what should I do? Should I sell here? Should I buy here? What do you think of this? And I want to get you as my student to that point where you never have to ask those questions again. Remember, once again, when you ask, what do you think the market's going to do? Where should I sell? Where should I buy? You're telling all the other traders in the world, and you're telling the markets, I don't have any idea what to do. You should never be at that point as a trader, all right? You should always study and research enough so you know in any environment, in any circumstance, what you should do, whether you should be a buyer, whether you should be a seller, where you want to enter, where you want to exit. So as my mentor, my goal is not to trade for you. My goal as your mentor is to teach you how to trade with a specialist edge. This is the same way my mentors taught me some 43 years ago when I was struggling tremendously, probably doing the same thing many other people are struggling with. I was following all the news, all the newsletters. That we didn't have online chat rooms and trading rooms then, but we had newsletters. I had dozens of them I was following. I was waiting for all the earnings reports and all my stocks I was trading. I was watching the guys on TV, and guess what? I couldn't make a dime. So as I often say, if those things didn't work 43 years ago, why do you think, in what world do you think that they're going to start miraculously working right now? There's no consistency in those things. The only consistency is in listening to one thing, and that's the chart in front of you, because that's the source. That's what you're trading. That's what's telling you what it wants to do. So our job is very simple as a trader. It's only twofold. Our job is simply to listen to the market, find out what it wants to do, and then jump on board. And you're going to see how simple it is in this entry rules to this method I'm going to be sharing with you today. Now, since this is an educational class, ask me as many questions as you'd like, but we have a fairly large size here for a Saturday morning webinar. So please, I don't want to stop for every slide because we'll take up way too much of your Saturday morning. So in this presentation today, please, if you have a question, just wait till the very end to ask. I promise I'll get to each and every one of them. The only one I will answer right now is the most common question I get for every webinar, and is this being recorded? Yes, it is. We record all the webinars, so if you have to leave early, or if you're having technical issues. So a lot of our students lately have had technical issues. I think it's because everyone is on the internet or everyone's on a GoToWebinar these days, so oftentimes it's overcrowded. If it crashes or if you can't see or hear clearly, often if you just log off and then log back on again, the problem will be resolved, okay? So with that being said, let us begin today's presentation. And we're going to be talking about strategy 3A. This strategy, which I learned from my mentors years ago, is really designed to capture these strong volatile markets, okay? It's called a continuation method. Now, let me share with you some of the highlights of this particular method. As we said, it's a continuation strategy, meaning that it waits for a trend to be established, and then a little pause or a little, waiting period for a while, which allows you to jump on board, and then we jump on board once the trend resumes, okay? Now, the way we do this is by applying a unique Bollinger Band setting. All right, this is the tool that we're going to be using in this strategy. Now, usually we reserve telling our students this setting because it's a proprietary setting. We won't tell people unless you're a course member, but because you're joining us here on this Saturday, because we want to educate you, we're going to give you the rules to this unique Bollinger Band setting, so you can start applying it as soon as you'd like. As I said, it's designed to trade quick, powerful trends, but the good news is in our courses, we teach you how to stay in this as long as you'd like, all right? We teach you roughly upwards of 7 different exit points, 7 different entries, and 7 different stop placements. So that's what we say. As an educator, we're providing you with this information, much the same way we call it kind of like a buffet line. We're in a buffet line. If you ever go to a restaurant or buffet, you see you have all these different choices for your entree, all these different choices for your salad, all these different choices for what drink you want, all these different choices for what dessert. And everyone is not going to pick the exact same thing. In fact, you can go into a restaurant, a buffet line, and you'll get 2 people there that they'll choose the opposite things, but they're both going to have an enjoyable, a pleasurable meal, right? Well, trading is the same way. You should never trade the exact same way someone else is doing. You should always pick your own entry point, your own exit, similar to a buffet line. You're still going to do well, but you're going to be comfortable because that's what makes you feel comfortable, trading according to your own means. So think of trading like a buffet line. It should never mean that you're all going to eat the same thing. I mean, what kind of a meal experience would that be if you went to a restaurant and everyone had to eat and drink the exact same thing? It'd be, well, okay, it'd be fine for one time, but after a while you wouldn't go there anymore, right? It'd be, you wouldn't have a choice. Trading is all about choices. That's the only way you become consistent. That's why I said in the beginning of this presentation, we want to get you to the point where you decide, where you pick what you want to eat out of that buffet line, what you pick what you want to trade out of that buffet line. That's how you become consistent. So we have a number of ways to enter, to exit. And the good news is strategy 3A, when we first, marketed this, we thought it was mainly for, fast markets, volatile markets like the E-mini, because that's my market of choice. And I was really trading this mainly on the intraday E-mini. But guess what? You can apply it to any market, any time frame, and any direction. Now, we're going to basically show you the majority of these signals and these displays today, these chart examples with stocks. But you can apply it to currency pairs, futures, commodities, Bitcoin. It makes absolutely no difference. And it makes no difference which market you're going to be trading. Or the Asian markets, Canadian, European, it makes no difference, okay? But with all of our methods, I don't care if it's this one or something else, always paper trade first, okay? There's nothing wrong with paper trading. Think of any other endeavor, any other hobby, any other career. No one just jumps into it, all right? There's always a rehearsal portion. Think of any actor or any musician, all right? There's always a point of rehearsing before you begin the play, before you begin the movie, before you begin the concert. No one just jumps in and says, well, I'm going to start tomorrow. I haven't rehearsed. Think of an athlete. No athlete ever says, well, tomorrow I'm going to be in that, that game. I'll just start playing. I haven't practiced. I haven't worked out, but I'll just start tomorrow. It's no different with trading. You have to rehearse, you have to practice, and the way we do that is through paper trading. That's how you see what works for you. That's how you'll decide what your entry point, should be. That's how you'll decide what your exit point will be, okay? Now, our edge here is consistency. Once again, most people get consistency wrong in the definition. They think consistency means, wow, that means there's a lot of winning trades. That's actually not the true definition. A consistent method is one that's able to recoup losses. It's not about you have 90% winners. No, a consistent method is one that's able to recoup those losses often right away. So that means there's an awareness that you will have a loss every once in a while. That's okay. But what you want is a consistent method that will recoup those and hopefully make back what you lost and even more. Okay, this is what will sustain you. Remember, as your mentor, as your instructor, I don't want to just give you a method that has a couple of great trades and then gives it all back. I wouldn't be a great instructor or a teacher if I gave you a method like that. What I'm trying to do is instill in you a process where it's okay to lose every once in a while if you keep the losses to a minimum, but give you a method that's able to recoup those losses. That's what consistency is. Now, consistency is what has sustained me now for 4 decades, not some fly-by-night method that promised the world and had a good couple of months or maybe even a good year and then I lost it all the next year. That's not consistency. Unfortunately, that's usually what's out there today because everyone's looking for the home run. Everyone's looking for the jackpot to retire on. And unfortunately, it really doesn't exist. What will sustain you, not just to having a good couple of months or a good year, I want to sustain you for a good decade, 2 or 3 decades. That's what consistency will do, okay? All right, so let's look at the standard Bollinger Band setting because we're going to be talking about Bollinger Bands with this particular method, and I'm sure most of you are very familiar with Bollinger Bands. But for those of you who are not, Bollinger Band is a very prominent tool. It's a great indicator. We're just not going to use it the way it's normally applied. But just let me share with you what the settings are. I'm not going to go into the inner workings and how the technical indicator has been devised and everything. I'm just going to share with you what the settings are. Now, basically, it's 3 bands, all right? Now, the middle band is a 20-period simple moving average. That's all it is. And what you have are a band on top of it, an upper band, and a lower band. So the deviation is basically just the distance, according to the formula, how far above and below those upper and lower bands are. And they're usually set to 2. So on any platform that has the Bollinger Bands, you usually see the upper and lower deviation set at 2, and the moving average will be at 20. Now, when we apply this to a standard chart, here we're going to show you a generic chart. This is what it looks like, okay? So you'll have the chart here, and you'll have these Bollinger Bands. Here's the upper, the middle, and the lower. Now, conventional wisdom says that when these contract, as you see the higher going in and the lower going up, this usually calls for some type of volatility to occur, all right? As you see, it's going up, the bottom one is going up, the top one is going down, and then the volatility resumes to the downside. That's the conventional way to use it, or one of the conventional ways to use it, okay? We're going to use it a little bit differently. We're not going to apply it that way. Now, here are the settings we like to use. Here are our proprietary settings for strategy 3A. We're going to keep the moving average the exact same. So the basic time period or the length will stay at 20. But what we're doing is changing the upper and the lower deviation, or the distance they are going to be from that middle 20 period moving average. So we're going down to fractions. All right. Now, if you don't copy this down, or you say, oh gosh, I don't have a pencil or paper, don't worry. This is going to be recorded. You'll all get a recording, a link to this recording, so you can watch this over and over again. So you don't have to feel like, wow, I didn't get those, Steve. You moved too fast. It's okay. You'll all get a link to this, and you can copy these down later. But the upper deviation will be 0.382. Remember, we're going down to fraction, and the lower will be obviously negative 0.382. Now, before you say, oh, this is some Fibonacci, some mysterious number here, this was the number my mentors gave me some 40 years ago when I first started using it. Trust me, I've experimented with every number from 0.50 to 2.80. It doesn't matter. I've experimented with anything. And guess what? After years and years of experimenting with it, I just went back to the original setting my mentors gave me, because this seems to work the best for what we're doing right here. But feel free to experiment. Remember, again, it's like that buffet line. You know, as long as you have the basic core of the format, pick and choose. This is what we encourage. That's why there's no statistics or no, win-loss ratios. Or I know I'm going to get these questions at the very end of the presentation, the way I always do. But let me just state once again, no two traders should ever trade alike. What we give our traders are a standard format, a benchmark. But then you're not in any way required to trade that way. You can use one of the 7 different entries, one of the 7 different exits, one of the 7 different stop placements. Remember, trading is a buffet line. You shouldn't trade alike. The only way you get statistics like win-loss ratios, like worst-case drawdowns, is when everyone is required to trade the same way. If you trade the same way, enter at the exact same spot, exit at the same spot, place your stop at the same spot, that's how you come up with statistics. Well, guess what? We encourage you to trade differently. So there's no way we can have stats here at Specialist Trading, because there's 1,000,001 ways to trade it. There's multiple variables, and we encourage this. So please know this, that you don't have to stick with 0.382. This is just the standard benchmark for this setting. All right, so here are the standard settings using the Bollinger Bands. Now when we set them to the proprietary settings, look how the Bollinger Bands have been altered and how they look. This is the look we're going for, something that's more fluid, more flowing, okay? Because it's going to help us with our entries and also eventually with our exits, but we're only talking about our entries in this particular webinar today. Okay, so let's go over the Strategy 3A buy rules. I'll go over them kind of quickly, but it'll make a lot more sense once we show you a lot of the chart examples, okay? Okay, step 1. Obviously, you want to plot the proprietary Bollinger Band setting on your chart. This is the proprietary one where we go down to 0.382. Okay, so this is an older chart of Amazon, but just for educational purposes so you know how to do it. And this is our charting platform, the PTS Primo charting platform. All right, so here we have this older chart of Amazon. Now, looking at this, someone would say, well, Steve, this is so overbought. Look at how straight up this went. All the indicators are overbought. That guy in the chat room tells me I should be selling. So I'm going to short this, right? Well, remember, we never listen to anything other than the chart in front of us. So that's why we don't have chat rooms at Specialist Trading. That's why we don't care about earnings. If you want to look at those things, feel free to, but then ask yourself, how is your trading going? Is it really going in the direction you want? If it's not the way mine wasn't 43 years ago, you may want to listen to this, okay? All right, so the first thing we want to do is apply the Bollinger Bands. And our platform, it's already pre-formatted for you, so there's nothing you have to do. So on the platform, simply click on Strategy 3A, click on Indicator, and there it is, okay? Already pre-formatted, nothing you have to do. If you have another platform, it's difficult sometimes. Sometimes they don't even give you the option to editing it. So that's why it's so simple to use on our platform. We specifically designed it to have everything there one click away. All right, so there is the plotting of the Bollinger Bands. Now, this leads us to step 2. We need to see that 5 consecutive I didn't say just 5 bars, but they have to be consecutive price bars, must close either on or above that highest Bollinger Band. All right, so let's look at this right here. Now we're looking at this and we're seeing, okay, we have 1, 2, 3, okay, these are below, but now we have 1, 2, 3, 4, 5 consecutive, okay? There we are. So 5 consecutive bars are closing above. So what does this mean? Well, it leads us to step 3. We're going to enter to buy when price trades 1 tick above bar 5. Now, one of our entries could be buying at the market. Another one could be placing a limit lower. But in this standard format, we're only going to enter to buy when it trades. It doesn't have to close, but when it trades 1 tick above bar number 5. Okay, so this is our entry point right here. Now, here's one thing I don't have in the steps, but it's one thing we teach our students. Once again, usually this is just for reserved for the students in the class, but I'll share it with you. Now, many times it'll trade there, remember, not close, but just trade there on the very next bar. Other times you have to wait 3 or 4 bars, which you'll see some examples later on in the presentation. That's okay. If you want to wait, that's fine. Some of our students say, you know, Steve, it has to happen on the next bar and then I'm out. That's okay too. This is why we don't have statistics. We want you to trade according to your means. Here's the one thing though that's in the basic format. If it doesn't trade there on the next 2 or 3 bars and then goes lower and closes below this top Bollinger Band, we would suggest negating the setup altogether because you haven't purchased it yet. And usually if it trades and closes in or below that top Bollinger Band, most likely the trend has dissipated and it's not going to pan out and you're not going to get the type of results you usually are looking for. So we would suggest if you don't buy it and it continues to go lower and lower, just to negate the setup and look for another one. All right? So guess what? We were lucky enough to enter on the very next trade. The very next bar. And look what happened. You see how simple it is to catch volatility. Now, there was no looking at any news, no earnings. We didn't care what the institutions were doing. We didn't care what was going on economically in the world. It made no difference. And someone would say, well, how did you know to buy that? Why? Because the market told us. Remember, your job as a trader is simple. You don't have to overcomplicate it by using all these things that have shown no consistency, like news or like earnings or like what's going on TV or in chat rooms. All you have to do is listen to the market because the market tells you what it wants to do most of the time. And once you figure out what it wants to do, you jump on board. Just add a little structure in what we're teaching you right here and jump on board. That's all trading is. When you learn to simplify your trading method, that's when you become a consistent trader. Most of us have been taught the opposite though. We always think, well, the more complicated something is, the more valid it will be, right? Well, in my 43 years, I've really found that it's the exact opposite. You will be more consistent if you keep things simple. Now, let's look at the opposite side of the coin. What if you want to sell? And I'm going to go through these quickly because it's basically the same rules, but we're just going to reverse the process. Step 1, we're going to plot the proprietary Bollinger Band setting once again. So on our platform, it's as simple as just clicking on strategy 3A in the upper green strategy tab. Remember, everything is one click away. It's easy access. Click on indicator. And there it is. It appears. So there's nothing you have to format. There's nothing you have to edit. And, many platforms I know don't even give you that option to edit anything. So this is why we created the platform. Our Pro Traders Strategies and myself, we developed this to make it as simple as possible because trading should be simple. When you're really searching for something, you don't want to be spending an hour trying to load a chart. You want it to be there in a second, right? And that's how we designed it. So you see right here, okay, well, looking at Roku now, this is the first chart we looked at, where someone thought, hey, well, this is a reversal, right? That chat room I go to says you got to buy here because all the institutions are buying, and that 10,000 online course I took about the institutions said they're all buying here. That's why we opened lower and closed higher. So I want to be a buyer because they're never wrong, right? Once again, as I say almost every webinar, I traded with the institutions some 4 decades ago. I was on the floor when they would enter their orders when I was making markets and stocks. They would give me their orders. And I can tell you full-heartedly that they have no higher levels of consistency than someone who's been trading for a couple of weeks. I saw them lose tremendously all the time. So why would I put my faith in these guys? Just because they have a lot of money behind them doesn't mean that they're going to be any more consistent than anyone else. I would never trust what the institutions are doing. I would trust what the market's telling me. So if I apply that countdown, which is step number 2, we want to see 5 consecutive price bars close either on or below that lowest Bollinger Band. So if I once again apply this, I say, well, we're above here. We have a low close, but it's not below. Here's our first one below. Now I count 1, 2, 3, 4, 5. This brings us to what I was telling you before. What is the market telling you? Not the institution, not some guy in a chat room. What's the market telling you? It's telling you it wants to go lower. So I don't really have to listen to those things. I don't have to look at earnings or news. I just say, well, the market's telling me it wants to go lower. So now I have to apply some structure. I can't, it's not just as simple as saying, well, I just sell at the market, because you need to, fine tune things a bit. You need to add some filters in the form of structure in a strategy. So this brings us to step 3. We're going to enter to sell when price trades. Remember, trades, does not have to close there, but when it trades 1 tick below that 5th bar. All right, so that would be right here. Okay, so let's wait and see what happened here. Well, we had to wait for a couple of days. It never closed above this, so it's okay to wait if we wanted to. And remember, you have the option. A lot of times students will say, well, Steve, if it doesn't happen on the next one, I'm out. There's nothing wrong with that. Remember, you need to trade and make your own decisions, not me. This is just the standard benchmark. Still, some other students will say, well, Steve, I'm going to use another method where I actually would enter up here at a limit. And this is what we teach you in the course. That's fine too. Still, others would say, well, I'm just going to wait until it trades 1 tick below. And it did. And as you notice, it traded 1 tick below and then closed higher. So does this mean, wow, the trade is going to become a loser? That's it. I'm losing on the day already. No. It's all we care about is if it traded 1 tick below, because had you entered, even though that day you would have had a losing amount in your column, look what happened later on. 45 points potentially you could have captured. I know a lot of you are saying, well, Steve, would I have made 45, or where's the exit? I can't divulge that to you right now. Going back to that metaphor of a restaurant, right now I'm giving you an appetizer, but I can't give you the entire meal for free. It's the same thing. All of our students who have purchased this method in the past, it wouldn't be fair if I just gave them all the rules where you exit, the exact stop placement. It wouldn't be fair to them. So I'm just telling you that potentially you could have captured 45 points. All right, now what happened in Roku when the market shifted, when the energy and the volatility went to the upside? Well, we just simply wait for price to have 5 closes above. We're seeing how it's just oscillating above and below the bottom and top. And what do we have here? 1, 2, 3, 4, 5 bars, right? So now we're just reversing to the upside. So you can employ any of the entry rules, but using the standard one, we're going to buy if it trades 1 tick above, doesn't have to close there. And as you can see, it opened higher, but you still would have purchased somewhere around here, and in 2 days later, potentially captured 25 points. That's coming into this weekend. So it may go higher Monday, it may not. Either way, we teach you how to manage this trade in the course. So you see how simple this is. We never had to overcomplicate things. Why? Because we're only listening to one thing, the chart in front of us. Everything you need to know is right there in front of you. For some reason, we're always taught not to look there, but to look at TV, to go to a chat room, to wait for the earnings, to go to some blog site and find out what they like. Why don't we just focus on the chart? Because it's right there in front of us. Okay, so now you know the process. Let's look at some more recent examples. These are things that happened just recently that you could have captured if you were a student in the 3A course. All right, EA, all right, this was just in the first week of April. We see here that we have 1 close above, but then we close right back down below. So this is not a setup, but now we have 1, 2, 3, 4, 5 bars closing above the high Bollinger Band. And coming into this week, 10 points you could have made to the upside very quickly, okay? That's how you capture momentum and volatility. How about CSX, all right? We're above the highest Bollinger Band. Now we have 1, 2, 3, 4, 5 closes. So here's where we want to go short. Got short on the very next bar, and 20 points potentially coming into the end of March, okay? See how simple that was? There was no need or reason to wonder what's going on with the coronavirus, or even look at any of that. The market already had told you it wanted to go lower because we had 5 closes below that proprietary Bollinger Band setting. So that's really all you needed to know. All right. Looking here in April, okay, once again, we have 1, 2, 3, 4, 5 closes. This was in Costco. You would have entered on the next day, 17 points coming into yesterday, Friday. Okay. See, trading is simple. It's just the trader who overcomplicates things. It doesn't have to be that way. How about HAS? Okay, well, we're below the lowest Bollinger Band. Now we close mid interval, then we close above, then we close below. 1, 2, 3 closes below. And even though this opened higher, where did we close? So this is still valid. So if you count from here, we have 5 closes below. Remember, don't get caught up in thinking that, well, Steve, it opened higher. It doesn't matter. It's just if it closes below that lowest Bollinger Band. It doesn't have to be entirely below the way these are. Look how this one opened above and then closed lower. This is the market telling you that it doesn't have enough momentum or energy to go up. It wants to go lower. So who are we to bucket? Why do we always try to pick a bottom or pick a top? Why don't we just go with it? So if we have 5 closes below, that's where we're going to sell, all right, using the standard format to enter. Now look at what happened the next 2 days. We never traded there. We never traded below. So it's up to you. If you don't like to hold off waiting for this, you could say, you know what, I'm not going to take this trade. That's fine. It's your choice. This is not a system. As long as we do not close above this lowest Bollinger Band, it's still an active setup though, but it's your choice whether you want to stay in or not, okay? Now, finally, 3 days later, you could have entered, and look where it closed. Did it close lower? Did we have a profit on the day? Absolutely not. We're still holding the position short. Now, I know a lot of you are saying, well, Steve, I can't short a $100 stock. This is too expensive. I understand, but who says you have to short the stock? You could purchase puts or some type of spread strategy, option strategy that has a downward bias. Remember, you're in charge of how you want to trade this. We're not saying that you have to short the stock. We're just giving you these high probability entry points. How you decide is up to you. We're not an option course. We don't tell you which option to buy. Remember, we're never telling you how to trade. We're only teaching you high probability points. So however you want to enter is up to you. Or if you didn't want to enter, that's up to you. This is not a system. But it would have been a good point because look what happened. 50 points coming into the end of March. Okay, this was in February, well before the news of the pandemic came out and it was that strong. But someone would say, well, how did you know to short this then? Because the pandemic news, nothing had really come out. And the isolation, the quarantine, nothing had come out then. So how would you know? Because the market told us. There's no reason to listen to the news if you don't want to. It's too discretionary. You know, someone could look at the news and say, oh, this is terrible. This is Armageddon. This is like the apocalypse. Someone else could look at the news and say, ah, it's not this bad. It's going to boil over, and then it's going to be actually a good buying opportunity. It's too subjective. Just listen to the market. How about Netflix, okay? This was coming into April. Once again, we closed above the top Bollinger Band, and they closed right back down below it. But then we have 1, 2, 3, 4, 5 closes, okay? So we're going to buy 1 tick above bar number 5. Now, if the next bar closes below, this setup is negated. Let's see what happened. Well, no, we entered on the next bar, 80 potential points coming into yesterday. Did we look at the earnings? Did we look at what was going on with the indexes in terms of financial or economic news? Absolutely not. There's absolutely no reason to do that if you don't want to. How about ROST? Okay. Well, we have 1 close below, then we close back up in the Bollinger Bands, but then we have another 1, 2, 3, 4, 5 below. So at the beginning of March, before the market really fell out of bed, we had a sell signal, ROST, all right? Way before the volatility had already sunk in. Could have gotten short for a quick 45 points coming into the end of March. How about Amazon, okay? A lot of talk about Amazon lately. People I know have been emailing me, students saying, gosh, Steve, I missed this. Guys, is there a strategy designed to catch that volatility? Yeah, strategy 3A. Look at what happened here. We had a close above, so that's 1 close above, 2 closes above, right back down below. The trade is negated. The setup is negated. Then we start over again. 1 above, 2, 3, 4, 5. So unless we close back down below the way we did here and the way we did here, this is an active setup to buy. So this was on April 1st, okay? Look what happened. You had to wait a couple of days, but we never closed below. We traded there, But remember, if we close below, then the trade is negated. The way we closed here, the way we closed here. But we never closed below. We only touched it. We would have entered on the 6th, 480 points coming in today, okay? I'm sure a lot of you aren't going to buy a $2,000 stock. You could have purchased calls. Maybe you could have purchased one share if you wanted to, okay? That's a nice trade for a little less than 2 weeks action. And then LRCX, okay? We were above the Bollinger Band. We started to oscillate below, and now we have 1, 2, 3, 4, 5 closes below. Someone could say, well, Steve, look at this. This is a reversal here at the end of February, and this is a bullish engulfing pattern. And this is that $5,000 candlestick course I took, and all the material says that's a buy signal. Okay, we have a doji right here. So this is a sign of a reversal. Okay, we've been going down. I can't think about selling now. All I can think about, this is a strong downward trend. I want to buy. Well, you can do whatever you want. Remember, but I'm here as an educator to release you from having to, spend your time and money on things that have no consistency. All right? We're not saying the candlesticks don't have any consistency, but there are certain ways of looking at them that don't. Now, let's say you had wanted to buy. Well, look what would have happened. You would have had maybe 1, 2, 3 days of some upward movement and then right back down again, okay? So what is this telling us? Unless we closed above, this is still a valid signal. Now look what happened on the next day here. All right, we had to wait a week, but we could have gotten short LRCX, and then ultimately 90 points we could have captured in the next couple of weeks coming into the end of March. So what happened to that major reversal? What happened to that bullish engulfing pattern? Well, it lasted about 3 or 4 days, and that was it. But look at this. All right, would you rather have made just maybe about 10 points and really struggling to make that to the upside, or capture potential 90 points to the downside? Okay. Now let's look at some different markets, some older charts in the E-mini and the forex, because once again we know that not everybody trades just stocks. So here's an hourly chart of the E-mini, an older chart. 5 closes above. We want to enter 1 tick above there, all right, on an hourly chart. You would have entered on the very next bar, and potentially you could have captured 12 points. That's $600 per contract. Now that's a 1 hour chart. Let's look at another one, another hour chart, but this time to the downside. The same concept applies, but we're just reversing it. 5 bars. We want to go short, 1 tick below. We entered on the very next bar. 40 points we could have captured in the next day. That's $2,000 potentially per unit if you stuck in that long. Remember, your exit is up to you. We provide you with different exit levels and different ways to determine the exit, but ultimately which one you choose is your choice. It's up to you. We're not going to tell you you must exit here, you must enter here, the way so many other websites do. We don't believe in that. That's why 80% of all traders fail. It's because you're blindly following what someone tells you. You've got to make that choice on your own. Here's a 4-hour chart of the New Zealand British pound, okay? Same concept applies. Just because we change market and time frames doesn't mean things have to change. We have 5 closes above. We want to enter 1 pip above. And on a 4-hour chart, we made a quick 50 pips, okay? Not a bad little trade, but if we wanted to make more, we simply increase the time frame. Here's a daily chart of the Canadian dollar, an older chart. 5 closes below, the same concept. We want to go short right there. We went short on the very next daily bar. 642 pips that you potentially could have captured. It's over $6,000 per unit. You could have just using the same way to catch volatility. Okay, so let's recap before we go into the question and answer. I want to tell you about a great offer we have. Remember, this is a continuation strategy. As you've just seen, we're looking for a trend to be established. The market has given us a clue as to what it wants to do. It kind of pauses, and then we jump on board, okay? The way we do this is by applying that unique Bollinger Band setting, which I gave to you. Don't worry if you didn't copy it down. It's on this video. You can go back and study and research it. Now, it's designed to trade these quick, powerful trends with a lot of volatility, with a lot of momentum. You can apply it to any market, any time frame, any direction, as we just shared with you. But remember, please, if you're going to apply this, don't start jumping in and trading this Monday. I would really suggest that you don't do that, because I can almost guarantee you will lose money because you didn't study it enough. In 24 or 48 hours, you most likely won't really fully understand the process. You'll jump in too quickly. You'll get out at the wrong place. You just don't have any idea. So paper trade it to see if this really fits your style. Remember, there will be losses. That's okay. That's what a consistent method is. Consistent method is an awareness of losses, but able to recoup those losses, okay? So, as we go forward here, ask yourself, do you think this strategy could have helped your trading this past year, okay? How about the last month? I'm sure many of you lost a lot of money trying to pick a bottom when the market was falling out of bed. And then when it reversed in April, I'm sure a lot of you were shorting into it and losing a lot of money hoping it's going to go down. Do you think this could have helped you last year? And do you think it could have helped you the last couple of months? I think if you answer honestly, the answer will be yes. So we have a great offer for all the attendees today. Taking time out of your Saturday morning, we have our special strategy 3A course that we're going to offer you for a great, great discount. This is our premier continuation method. Remember, once again, when we first started marketing this, Pro Trader Strategies and I, it was really marketed as an E-mini strategy because that's where a lot of the volatility and momentum was in intraday trading. But our students told us over the years that they used it on daily bars for stocks, for futures, currency pairs. So don't get fooled by the title there, okay? Now, the Strategy 3A course usually runs for close to $700, but we're going to discount it tremendously. So don't even concern yourself with the price there. We're also going to throw in another strategy. Guess what? We're going to give you a completely different strategy, all the entries, all the exits, all the stop placement. This is an entirely different format. It's strategy number 1. This is a pullback method. Now, if you're not familiar with what a pullback method is, let me share with you a recent setup in this. This was in the spiders. As you can see, someone looking at this would say, well, wait a minute. Okay, this is a strategy 3A. Most likely, if you have the Bollinger Bands, excuse me, this is 1, 2, 3, 4, 5 closes below, so I want to go short right here, right? Well, if we applied this is not the same chart we looked at before, but most likely you would say we're in a downtrend. Here's what strategy 1 does. Strategy 1 determines what the overall trend is, and then it looks to buy at a lower price in the overall trend. This is what's called a pullback strategy. So where other strategies were looking to sell, strategy 1 actually generated a buy signal here before a nice 8-point gain in the spiders. Now, I'm sure a lot of you are saying, well, 8 points, that's an expensive stock. Yes, but that 8 points represented nearly 700 points in the down. So it really is a great method, completely different. It has nothing to do with strategy 3A. You will never get signals overlapping. They look and have entirely different parameters. This is usually running close to 700 as well. We're going to discount this tremendously for all the people attending today, but we're not stopping there. We have extra bonuses. In fact, we have what we call our Saturday morning bonuses. Bonus number 1, if you have a platform such as TradeStation, MetaStock, MT4, Sierra Charts, NinjaTrader, we'll give you the add-ons. That's the up and down arrows for signals that are generated for all of these different platforms. Okay, this is usually close to $1,900 value. We're also giving you bonus number 2, our Secrets of a Stock Exchange Specialist course. This is a 3-hour video seminar. I was recorded speaking in Denver years ago at a live conference. I was the head speaker there, and I give many different edges, many different ways to trade the market. You'll get this at nearly $1,000 value. This is thrown in. You also get the PDF version of my book. This is where I talk about how I was trading during the crash of 1987. That's a nearly $100 value. Bonus number 4, 6 months of our PTS Primo charting platform. I'm going to talk about that in just a moment. Bonus number 5, it's Secrets 2.0 course. This is where we take the edges and the learning up a notch to more advanced ways to trade. Bonus number 6 and 7 are very similar, but these are tremendous, tremendous advantages here because these are our scanners, ways in which to identify strategy setups or multiple strategy setups, okay? These are all tremendously valuable, and their value is close to some of these things, close to $2,000. We're going to discount these tremendously. You'll see how much we discount in just a few seconds here. But let me share with you bonus number 4. This is our PTS Primo charting platform. I'm really proud of this. I designed this with Pro Trader Strategies because it's specifically designed to teach traders how to trade. Let me share with you what's offered. Obviously, you're going to get strategy 1 and 3A. Everything's one click away. It won't be like using it with TradeStation or MetaStock. It'll just be one click away in our strategy tab. You'll get all of these different features, but the one I'm most excited about is our strategy signal scanner. This is where you can scan for strategy 1 or strategy 3A signals on a nightly basis to see what they are. So you don't have to look through thousands of stocks every night. you can find out in a matter of minutes what the setups are. For example, let me show you how simple it is. Remember we shared with you on the platform, on our chart, the green strategy tab. You click that on, you see the drop-down menu. Before you were clicking on indicator. Now you just click on scan and you'll see this page appear, okay? Strategy 3A, scanning page. What you want to do next is just hit load symbols, and we provide you with a list of symbols for any market, any exchange, currency pairs, the DAX markets, Canadian markets, Asian markets, European, S&P 500, whatever one you want, futures, commodities, Bitcoin. Let's just choose the Dow 30, okay? So in a matter of seconds, you'll see the Dow 30. Then you just click on scan, and in probably less than 30 seconds, you'll see a series of red or green bars. The red ones mean there's a sell signal in that stock, and the green ones mean there's a buy signal. It's that simple. This whole process probably takes less than a minute every night, and you'll see setups for the next day, okay? So this is a great, great opportunity. You won't get that on any other platform. So you'll get all this, and it's just so simple and one click away. So I'm really proud. All of these things you'll get are over 90 of the technical indicators. You'll get auto-generated exits, another feature we have on our platform, along with personalized tech support. Really, this is the educational platform you've been searching for, because everything is one click away. It's right there, and it's so simple. We got tons of testimonials where people just love it. All right, so let's break down the Saturday morning discount. If you purchased all these things separately, Strategy 3A, Strategy 1, and 6 months of the platform, it would cost you normally $7,200, a little over $7,200. But don't worry, we're going to charge you much, much less than that. In fact, we're only going to charge you $297. That's a savings of over $69,000, nearly $7,000. But this is for a limited time, today only, or the next 24 hours. You're going to have to make a decision, because this offer will go back to over $7,200 by Monday. So take time out, watch this video again. If you really think that all these things can help you, for less than $300, you're getting about 4 decades worth of information and things I've accumulated to take your trading to the next level. Don't you think you owe it to yourself to invest in yourself? Less than $300, you have all of this at your access. Trust me, a year from today, you will have wished you became a member of these courses. I'm sure most of you spent over $300 in commission costs in the last month alone. Why not, probably in losses, much more than that. So why not you just take the time to invest in yourself? Less than $300, you'll have information that's taken me decades to accumulate, okay? Here's how to take advantage of this. My sister site, Pro Trader Strategies, I developed a platform with them. They're in charge of all the discounts and the pricing. I would suggest calling them directly if you have any questions concerning price or the platform at 310-598-6677. They'd be more than happy to help you with setting up anything on your platform. More than happy to tell you more about the advantages of the platform or the courses. And the link you see at the very bottom is the link that will take you to the information and the sign-up page. Unfortunately, it's not a live link, but if you look on the chat box, we just posted a live link of the offer. So all you have to do is click on the chat box and you'll see it right there, okay? Now, I promised you I would answer your questions, so I'll leave this page up here and I will answer any questions that you have. And just go to your question and answer box and type them in, okay? Okay, question. Let's see, why 5 and not 3? It looks like it should work. I'm not sure. I understand when you say why 5 and not 3. If you're talking about days, well, once again, I have traded this for going on 4 decades, and 5 seems to be enough to tell you that it will work. Now, remember, what did I say in the very beginning? We want you to research, and we want you to experiment and see what works for you. So if you want to keep the same basic format, but reduce it down to 3, we encourage that. So this is not a system. I'm sure you've all gone to websites or you've purchased strategies, so-called strategies, and everyone has to follow the same rules. We don't believe in that. We believe that that's the reason why most traders fail, because you're all eating from the same restaurant where you have the same meal. You have 100 people sit in a restaurant and everyone's eating the same thing. It's silly. You should be able to go to that buffet line, and one trader will say, well, you know what, I'm going to use the standard format of 5 bars, and someone else could say, okay, I'll use the standard, I'll use the 3. Now, remember, once you alter it, we always suggest that you paper trade it. Don't just jump in and saying, well, I'm picking 3 days and it's going to work for me. Because how do you know? Over time, you may go and research it for the last couple of weeks or maybe a couple of months, and it doesn't work that well. On paper, it seems okay, but then going back and paper trading it, it really doesn't. So that's why we always say paper trade, okay? Someone else saying, have you back traded your strategy? Well, once again, I think I mentioned this probably about a half hour ago. I always get this question, even after I went through it multiple times. There are no back testing of any strategy or method at Specialist Trading and Pro Trader Strategies. I can't stress that enough. I've said it about 4 times today. I'll say it again. The reason is, like I just said in the last question, we encourage you to trade the way you want. I'm going to use this metaphor again. Trading is like a buffet line. You should pick and choose what you want to eat. Not everyone should have the same meal. So if everyone is picking and choosing a different portion of the buffet line for your trading, there is no way we can backtest each and every one of your choices. That would be silly. And also on top of that, we shouldn't have to. We've all been taught that there is a specific system that works. All you have to do is follow these rules and you'll be successful. Well, guess what? That's not true. That was taught to me some 43 years ago, and it didn't work then. So it took me years to find out that I said, you know what? That's really not true. That's a myth. The only way you become successful and consistent is by making your own decisions. So if you make your own decisions, you have to backtest your own choice, not us, because we're just teaching you high probability areas, okay? Is this price a yearly fee? No, once you pay the $297, you own everything. The only thing you don't have is after 6 months, you would have to negotiate with Pro Trader Strategies if you want to continue the platform, because the platform is being thrown in free for 6 months. But after that, you can decide whether you want it, or if you've gotten to the point where you say, you know what, this is easy, I figured out, this is great, I don't need it anymore, well, that's fine. It's your choice. See, we really make it simple for you to decide. But just to give you a little bit of information, most of our students, when we've had different promotions, sometimes a 1 month free trial, sometimes 3 months, I would say about 80 to 90% continue to use it because it's so simple and it's so easy to continue. So I would talk to Pro Trader Strategies. If you're convinced that you want it more for a year or you want it for a lifetime, then contact them, okay? Someone's asking, if I contact Pro Trader Strategies, do I have to purchase something? No, there is absolutely no obligation. They have trading consultants manning the phones, but they will be happy to work with you. And, they're not going to try and upsell you. They just want, we're an educational company. We're trying to teach you. Now, after you take this course, let's say you spend the $297, and after 6 months, you say, my goodness, this is amazing. Can you have any other stuff? Sure, you can always contact them for more information. But there's absolutely no obligation to purchase anything. They're there to help you and to give you different price quotes, okay? Okay, good questions. I guess that's it. We're at the end of today's presentation. I hope you learned something. If anything at all, the concept I want you to really stick with and experiment with today, as you go and look at your charts today, ask yourself, are you overcomplicating your trading? Are you having so many requirements involved in order to make a decision? Are you looking outside of yourself for someone to tell you how to trade? Are you asking friends or chat room people, what do you think of this stock? What do you think of this market? What's the best time frame? If you're doing those things, trust me, after 4 decades, those are recipes for disaster. That's why most traders fail. The entire industry is based upon you simply going to a website or taking a course and following the rules, and don't worry, you'll be successful. Just one by one, follow the rules, and everyone trades the same way. If that works so well, why has it been estimated that 80 to 85% of all traders fail? It's because that doesn't work well. There's no consistency in that. So what is the remedy? What's the cure? The cure is to make your own trading decisions. And the only way you can do that is by being taught from someone who has been there for over 4 decades, who knows what works in terms of consistency and knows what doesn't, and then simply working with them so you can decide ultimately how to make your own decisions. We teach you sound fundamental things that have stood the test of time, that have high probability areas for entry. And we give you different options and variables, where to enter, where to exit, where to place your stop, just like the buffet line. But it's up to you to decide what you want to take out of the buffet line. That's how you become a consistent trader, okay? If you don't believe it, go back and look at your own results for the last 6 months or a year and see how well it's been working for you, blindly following someone or something else. Most likely it hasn't, right? you owe it to yourself to take your trading to the next level. For less than $300, you can get what I've accumulated in 4 decades, and you can really be, for the first time, taking charge of your own trading destiny, okay? So give Pro Trader Strategies a call. They have trading consultants manning the phones. And as we close and take one last look at our disclaimer, I just want to say thank you so much, and I wish you the best of luck and look forward to all of you becoming students of mine at Specialist Trading and Pro Trader Strategies. Have a great weekend. I'll see you next time. Bye-bye.